Hello, hello, hello. Welcome to Al Stock Trade. How's everyone doing today? Hope everyone's doing well. Okay, um, so I wanted to go ahead and talk about some stuff regarding Clover Health and a little bit about just the mentality and the psychology of the market, right? A lot of people like to chase stocks, right? They like to chase stocks that have gone up, right? I like to go ahead and chase stocks that have gone down, right? And right now, Clover is just a beautiful example of this. The market is misinterpreting the price, as we already know. They basically cleared their way and their path of profitability. So let me explain. So in this video, we're going to go ahead and look over the history of Clover Health and see if we can find and share with you guys some insights on what we see here. Okay, so as we talked about before, Clover Health went ahead and did a strategic exit of ACO Ray. So as we can see, Clover is actually starting to change, and Wall Street hasn't yet gotten to it to update those changes. Wall Street's going to love this strategic move, and then Clover Health is going to make Wall Street happy now because it's all about profits. Okay. So now we know it's frozen. So we got two people saying it's frozen. So let me double check here. Would you say it's frozen now? I don't even know what's going on here. Let me see. Hold on. One moment. Let's see here. All stock trades. Let's see. Hello, hello, hello. Yeah, it looks good to me. I don't know what you guys are talking about. Let's see. Yeah, it looks good. Looks good. Let's go ahead and see if we can, once we show it here. All right. Yeah, I don't know what you guys are talking about. Okay. All right. So now, so let's continue back onto what we're saying. Okay. So again, this is a live, so I want to make sure you guys hear it, but it looks good to me here. And we already got some feedback. It seems that everything is good. All right. So um where was I? What did I leave off to? So now Clover has a more strategic focus and more centralized focus on doubling down on the Medicare Advantage side. Okay. And what I have here is full year guidance from 2020 and all the way from 2021, 2022, and 2023. And I believe I read a earnings report for Humana was overgrow at 25% profitable, if that makes sense. So what I'm going to do is, we're going to do a series of calculations in which we went ahead and done before. But if we go down here and if we type in first off, let's just reload this real quick here. If we go ahead and go to our Mastering Stock Market course, Intrinsic Value Calculation with lifetime access, if you're curious, there'll be a link down below with a coupon code. If we go ahead and do that and multiply it with a 5% to estimate the future free cash flow, we get 61.5. So we can put in 61.5 here. We go 10 years into the future and discount back at a 10 to 15% discount rate with the 2 to 3% perpetuity rate divided by the number of outstanding shares of 486 million. We want to go ahead and determine the growth rate. So the growth rate, if we do 15%, it's a $4 stock. But I believe if they get to 25%, I believe it'll be an $8.53 stock. Okay. And if that's the case, considering the prices right now, we're looking at a 797% gain on your investment. So, I think personally, a 25% is an achievable growth rate, considering if they basically like put all of their mind power, all of their brain power in just becoming an insurance company and leveraging their technology. Okay. Then potentially down the road, they could just go ahead and focus on the other side of things, the non-insurance side. Let's focus on one business at a time. Okay. And if they can do that, and if they can grow at 25%, then I wouldn't doubt that we would see a $8 stock, right? So the thing is, you can't basically say what would a 2028 price target look like, because we don't know what's going to happen in 2028. All I know is this is the direction in where we go if they basically become profitable and they grow at a certain percentage. Now, back in the day, if you were to look at it, they were growing. If you go here, they were growing 46%, right? And here, and if you go up here, at one point, I think it was 2022, they were growing at literally over 100%, which was insane, right? I think it was this one. They're growing 140% year over year, right? So it's very difficult to say we're going to assign a price target for 2028. We can basically speculate about that, but we have to see a certain amount of things happen. Rates have to cut, which means, okay, let me start. Federal Reserve and the rates have to cut. When the rates cut, this discount rate goes down. Let me give you an example. What happens when the discount rate goes down? The stock price goes up, okay? So right now, the discount rate for Clover, I think, is around like 26, no, like 30% probably. I want you to just look at the bull case. 35%. Not even. 36%. Yeah, 98 cents, around that. So the discount rate for Clover now is 36%. I mean, people are shaving off so much value off of Clover because of the interest rates. Once those interest rates decrease, the discount rate goes down. And if you don't see it, if you look at the 10-year Treasury right now, we could go just pull up CNBC real quick here. If you look at the past 5 days, here, you can see that the 10-year Treasury is dropping a lot. I mean, just look at the 10-year Treasury. It is dropping let's just look at that drop, right? So we could go ahead and look up a year here. This drop is very significant, okay? And the more this drops, the better we can get at. Now, a couple things happened today, and we can go in and open up our Twitter here. And again, if you haven't followed us, definitely follow us on Twitter here. So, very quickly though, we are having a New Year's special, $800 off our lifetime access platforms. You can use coupon code New Year's for lifetime access. Now, if we were to go in and go to the JOLTS report, the last time the JOLTS report basically crashed like this or fell, which is in blue, it always preceded some form of a recession. So we are looking towards, at some point, potentially, and especially with today's data point, heading into a recession because of the economy weakening. In fact, if you look at, and you should definitely follow us on Twitter, because we do retweet and post some things that are very useful. 4 of the past 5 JOLTS reports have been revised lower, indicating that the Federal Reserve has been hiking on false or fake strong jobs reports, which is not good. It means that the economy is actually worse off than what it is. And we'll make a separate video about Bill Ackman having an interview with Bloomberg, in which he said that within his businesses, and he owns a lot of businesses, 2 in particular that I follow is Lowe's and Chipotle, which is a great barometer of the retail consumer basis, okay? And what he's finding is the economy is actually worse off than what the Federal Reserve thinks. And if that's the case, then a lot of folks now are anticipating that the Federal Reserve is, they have to cut interest rates, which is why we're seeing this huge drop right now. And that could just change any minute. Of course it can, right? But what it looks like is inflation is cooling. Inflation is slowly becoming in the rear view mirror. And these 10-year treasuries are starting to slip. Now, regardless if we have a soft landing or hard landing, it doesn't change the outcome. The outcome is the Federal Reserve is going to be cutting interest rates. Once the Federal Reserve cuts interest rates, discount rates will go down. Money will become cheaper. And then potentially the Federal Reserve has to stimulate the economy, as crazy as that sounds. And then you would then get a bull run in growth stocks, housing, et cetera, et cetera. Okay, so we're already starting to see this happen right before our eyes. If you go ahead and take a look at Bitcoin, I'm going to say Bitcoin stock. It's not a stock, but let's pull it up here. If you look at Bitcoin really quickly, or just better yet, it's better to tell it from this image. If you look at the 1 month of Bitcoin, just look at Bitcoin. Bitcoin had a crazy ride. In fact, let's see here, BTC price. I don't know if Garrett, thank you, Google. If you look at, Bitcoin, just look at it. Look at this rise. I mean, year to date, Bitcoin's up 165%. We are starting to see risk on Wall Street. Now, the question is, has this transitioned onto the Russell? Well, the answer is not yet. The Russell is sleeping right now. Clover Health is a sleeping giant. Small cap stocks that are essentially going to go from negative free cash flow to positive free cash flow are essentially a sleeping giant. This is exactly what I was waiting for. Now, the beautiful part is, instead of 4xing one's account, or if we're going to be basically 8xing, right? Based off of this. Now, again, once they pivot and then once they increase growth rates, then we'll basically evaluate them. We're getting more data from them. Okay. Now, if you want to grow them at what they've been growing at on average, we'll call it 15%. It's still a 3x return on your investment. Okay. Now, again, other retail investors are not going to know how to do these calculations, so they're not going to know the GPS of where the money. So they might actually take the stock and make it even overvalued. Now, depending on the data point and depending on the management team, I'm going to have to make some tough decisions in the next 2-3 years. Because the beautiful part about Chamath, and the beautiful part about this whole thing, and let me just say this really, really clearly here. The beautiful part about it is Clover was never designed to go this low. Clover was never, ever supposed to go this low. No one predicted that the Federal Reserve would screw this up so bad and not increase interest rates fast enough to basically tamper the demand, which was a supply and demand issue in the beginning, which turned into an inflation issue. They never thought this would happen, to a point where Chamath had to literally get margin called, right? And he's not happy about it. He's not happy about it. So Clover was never supposed to get this low. Let me remind you. Remember the offering regarding Clover? Remember the offering? The offering was at around $5 and like 50 cents. Ladies and gentlemen, the offering for Clover was around $5.50. We are getting prices that are significantly lower than that offering. So I've been taking advantage to where my average now is so freaking low that this is literally turning into easy money. Literally easy money. We know Clover's not going to go bankrupt now. The bankruptcy bullshit's gone, right? Because so now I'll show you the all the scores in the Proaski store, all the stock terminal statistics that we run to evaluate a company's risks, but we don't believe Clover's going to go bankrupt because now they're cutting off the losing side of their business, right? We know that's not going to happen, right? We know that the delisting is over because it'll easily go in over $1, especially in the next 180 days. I mean, my God, right? So it's looking really sexy. Now, for the folks that are sitting, for example, let's say person A, right? Or person F, right? For failure, right? I'm just kidding. Let's say it's sitting at a $12 average or $15 average and just has been holding, right? And is expecting the stock to, reach him or higher, and then is upset, let's say, if that value is like around $8, $9. Well, it's your fault, my friend. I'm going to speak directly to you. It's your fault. It's your fault, because if you were buying at 15, why the hell will you not buy at 95, 93 cents? See, there's a study happening in Stanford right now where the chair of economics professor is doing and conducting a study, which is actually quite fascinating. And it goes on the side of how Wall Street and how retail investors are. You see, when stocks go up, retail investors get happy and they buy. And when stocks go down, retail investors freak out. And I get it. And I get it. Your brain's not mentally structured to handle this psychology, which is, again, why education is important. It's a polite way of me saying something, right? Okay. So let me go in and I don't know why I did that. Let me go in and let's show you right now dumb money. Okay. If we go in and take a look at dumb money here, okay. Let me just go ahead and see this here real quick here. Let me go ahead and un memento here for a sec. Go ahead and take a look at real quick here. If we look at this graph real quick, look at dumb money. Just look at dumb money. Dumb money is off the charts right now. Dumb money is happy. Dumb money took off his shirt, running naked on the beach. You can see the hair everywhere. Dumb money is just woohoo, right? That's dumb money right now, right? And it's okay. We like dumb money because guess what? I make money off of dumb money, right? Because once we get this cycle and the cycle starts again and it goes down low, what is going to end up happening is value stocks are going to, go down because there's a recession, right? Or around that value stocks. I'm going to show you how this plays out. Okay. Value stocks go down. Then all of a sudden growth stocks go up. Clover will go up. And then Andrew Toy, if he's smart, which I know he is, he'll say, this is our time, guys. Clover Health is growing at an amazing 140%. And we were profitable before, but now we're going to prioritize growth over profitability because the market is ready for it. And we are going to turn all of that into profitability once the Clover Assistant fixes everything. And then the stock is going to go to the freaking moon. And then guess what? I'm going to sell, right? And then people are going to be pissy off at me. They're going to cuss me out, right? Because obviously, right, they're cussing me out when I buy too low and they're cussing me out when I sell, right? And then what I'm going to do is I'm going to go back to oil, gas, back to energy transfer, back to my home, right? I'm going to go back to value stocks, okay? And I'm going to rinse and repeat. Then I'm going to enjoy that dividend during this value recession that we're going to be having soon. And I'm going to sit down, relax, make money. And this is the economic cycle. This is how it works. The problem with retail investors is, I don't know what to tell you guys, is they want money now. You're consistently checking your phone, like something's going to change, right? Right. Obviously, if you're trading, swing trading, it's a different story. But I'm just saying, in terms of those folks that are just consistently trying to just, what's going on with Clover? Just relax. Okay. Relax. Things are going to work out. I'm very excited. This is a very bullish development for them to pull out of the ACO program. I hope what I'm saying makes sense. Okay. I really do. I hope what I'm saying is just, is sticking in the brain here. Okay. Now, just very quickly, because our prices will be increasing. So take advantage. This is the Happy New Year deal we're having, $800 off lifetime access. Coupon code New Year's. I went ahead and fixed it. And take advantage. We have financing options available. Understand that in the future, once beta access is lifted, we're no longer going to have lifetime access. It's just going to be for the course. And then discounted rate most likely for the stock terminal. We are going to have a lifetime access tier, but it is going to be in the $9,000 to $10,000 range. It's going to shoot up dramatically. This platform is ready to be built, and it's everything's basically in line to the sniper and the target is about to get hit, and then people are going to see the value of what we're basically creating here. So all the people that have supported us from the beginning, this will be a great discount for all of you guys. All right, ladies and gentlemen, that's all I have for you guys. I hope you enjoyed this video, and I hope that you see this economic cycle play out, okay? And you're going to play it around in your head. And if you don't believe me, go talk to ChatGPT. Go like talk about it and say, there's this guy, he's saying these things. Essentially what I'm saying is Do your own due diligence. Study other market cycles. Study what happened in the great financial crisis. Go read Ray Dalio's book. Understand that. But understand something here. Chamath is not happy. Okay. Chamath is very not happy right now because we are able to get a price better than him. Can you believe that? Can you believe that? We're getting a better deal than this guy. And all I want to say is thank you, bro. Thank you, bro. I appreciate it, man. My future generation, my future offspring, and the beautiful members of my community, we appreciate this because we love it. Once he sold after that $2-ish, this shit dropped so hard. It was amazing. What a wonderful deal. Wonderful deal. All right, folks. I'll see you on the next one.